Hello traders. Today is the 26th of August 2011, and this video is for educational purposes only. It is neither a solicitation or an offer to buy or sell any financial instrument, and it's primarily for the TSTW 24 traders. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we will use the 5% money management rules, and always use a stop loss. Very important. Do not cut that corner. Very important. Now this is Forex tips part 2. The title of this video is Forex tips part 2. If you have not watched the video that we titled Forex tips part 1, you may go to our channel www.youtube.com/George Trio. Watch the video that we titled Forex tips part 1. This is Forex tips part 2. We are now I'm not trading right now, but I'm doing this video for educational purposes. As you can see right here, the previous high, as I told you in the previous video, the previous high, the price did close below it right here. It did close below it here, close below it. When above it, come back again and close below it. You will sell it as soon as the price closes below the previous high here, this one here. You will sell it here at 104.85. Using a kind of a stop loss, you make your own decision how you place your stop loss. Because there was a previous high here, the best place to place is maybe 20 pip below the previous high, if you can afford it. If not, you decide which one is suitable for you. In this case, if I'm here trading, I will use 30 pip stop loss. This is for day trading. 30 pip stop loss or 38 pip, depending on the volatility of the financial instrument that you are using. You cannot use 30 pip for Google or for Apple. You must know the daily range of the financial instrument that you are taking and the risk that you are prepared to take. Always using the 5% money management rule, which means if you are risking $1,000, $1,000 must be 5% of your trading account. If you open 10 trades, the total amount that you are risking on all those 10 trades must not exceed 5% of your trading account. If you have reached 5% of your trading account, you can only see opportunity pass in front of you, because you don't want to break that whole rule. Very important. You don't want to break that rule. That's the discipline. Now so you sell now at 104.85, place your stop loss 30 pip below, which will bring you somewhere at 105.16, somewhere here where I place my red horizontal line, and you just let it roll it. You just give it a chance. Let it roll. Let the price play the game for you. You've done your beats. You make the right decision. You count the five wave: first wave, second wave, third wave, fourth wave, fifth wave. Now you receive a signal to sell. Paying attention to the price itself. You are not cutting corners. As always, traders, I'm not making my decision on this 5-minute chart. I'm using a higher time frame before switching back to this 5-minute chart. I show you also on the 4-hour chart what was happening in the previous video. So you know what's happening. I also show you the fundamental regarding the news, all the things. So if you go back now to the weekly chart, you can see that the price is this went up, pulled back, went up, is here. Now they slowed it down. It's now in there's a kind of resistance zone here. It break below it. Now it's retesting this level here. Do not make your trading decision on a 5-minute, 3-minute chart. Be patient. Be patient. If you are experiencing a lot of frustration in your trading, take it easy. It's part of the training. You are training to become a better trader. It's part of the game. Don't cut corners, okay? Go through the process, okay? Alright? And slowly but surely, okay? Don't rush. Don't rush, okay? It's not a gambling game, okay? You can learn to do it properly, okay? Going back again, enough of my blah 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 blah. So it's working nicely for us, you see now? It's working nicely for us, okay? So, according to the theory, again, theory, enough of blah blah, the theory. After they find a wave, the market is considered as overbought. Now, if the market is accepted as overbought, we will definitely receive a signal to sell. Okay, that's the theory. Now we receive a signal to sell. In normal condition, repeat, in normal condition, the price should come down in the zone of 50% and 61.8% Fibonacci retracement level of the whole trend. So the whole trend has started from the first wave and has ended here on the fifth area wave. So we want to know where is the 50% and the 61.8% theory. Okay, a lot of traders lose a lot of money just applying the theory, because what they were trying to do, they were trying to force the area wave on the price. You must come to the 50% zone. I'm selling you here and I'm commanding you to go to the 50% zone, and the price is doing something else. And it's happening all the time. That's how ordinary traders are trading. Or some trader will come and sell at Fibonacci levels. They say that it will go down by all means because it went down last time. Combine the technical and fundamental and let the price show you the way. What we have done now, we count the 5 waves and we relax and we apply, okay, the knowledge of the uptrend. This previous high right here, after this very high, the price closes below the previous high. It's a weakness. We will take advantage of that, just understanding what the price itself is telling us. Here there was a downtrend and a consolidation, a breakout, a pullback, third area wave, second area wave, third area wave, fourth area wave, fifth area wave. You were here live if you watched the video that we titled Forex Tips Part 1. Very important. Then you understand all this blah blah blah. What I'm going to do now, I'm going to pause the video because there's no point to watch about all this going on. How long it's going to take, we do not know. It's a night time. It may drag until London opens. So, I mean, watching the time, also, I mean, I'll do this one and do something else, okay? So, I will pause the video and we'll come back to this and see how the trade is working nicely for us, okay? So, speak to you soon. Yeah, it's working nicely, okay? It's working perfectly, okay? As you can see, we sold it here at 104.85. The price now at 104.75. Okay, this line here, this is the 50%, and the one below is 61.8. You'll be better for the greedy one to be achieved, okay, in the zone of 61.8. That remain to be seen. As you can see, there is a support level here, and some traders are taking profit here. That's perfectly okay. We'll give it a chance, okay, allowing the price to come down. Okay, you must manage the trade, okay. So I'll leave it to go down. This is the Australian dollar US dollar currency pair, a currency pair that we consider very overbought right now. But tomorrow, if the Fed is speaking, very important, if the Fed is coming up again with some of the stimulus or quantitative easing, the Australian dollar will continue the movement to the upside and will disregard completely all the bearish blah 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 blah. Okay, so this is what we are talking about, the trading triangle. Attention on the fundamental, the news. Okay, so tomorrow the important speech by Mr. Bernanke. Okay, so this evening we have seen Stevens, okay, the governor of the Royal Bank of Australia, okay, made his speech. Tomorrow is the turn of Mr. Bernanke at 10 a.m. Eastern time. Okay, so rendezvous, yeah, very important. So go back again. So this is what we see on the monthly chart. In overbought zone, we are giving priority to selling. It does not mean that we cannot buy, but if you want to buy in the overbought zone, the strategy is for day trading. Okay, so you don't want to swing trade in this session. This is where a lot of swing traders lose money. because it's not the best place to swing trade. You're in the overbought zone, okay? So it's better to day trade, okay? This is what we are doing now. So going back again on the 5-minute chart of the Australian dollar US dollar currency pair, we are waiting for a greedy target somewhere. The median line of the 50% or the 61.8 would be better placed somewhere here. It's not big one, but I mean, we'll see how much they will give us, okay? But I'm not trading this, but I'm doing this video for educational purposes. I want to show you another currency pair. I'm going to open another window. Pay attention carefully here. This is the Euro USD currency pair, okay? Again, on the 5-minute chart, we have a kind of consolidation taking place for ages. Since 5 p.m. London time up to 1 a.m. London time, the Euro USD was consolidating, also due to the waiting time for Stevens, the governor of Australian speech. Market waiting for important, okay, messages. If you are using the technical, you don't know what is going on. This is why you're going to make a lot of wrong decisions. That's why it's so important to know, okay, what's going on, okay? So it's not by mistake that the price just playing going up and down. The market was waiting for important speech, okay? Tomorrow you will see similar situation when Mr. Bernanke is about to speak, okay? So we have a consolidation, blah 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 blah, and then boom, okay? This is the first area wave. From here all the way up here, that's the first area wave. Can you see that? From this level here, no stop. First area wave, second area wave, third area wave. We are now in the fourth area wave. We will wait for the price to display for us the fifth area wave, and after the fifth area wave, we wait for a signal, okay? If we receive the signal, if there's no signal, there's no signal, okay? So this is the previous resistance zone. The price may like to test this level here, okay? The same thing I told you before regarding the Australian dollar on the 4-hour chart of the Euro USD. Okay, now I will remove some of my drawing. Okay, now I leave them like this. We show you this before. First area wave, second area wave, third area wave, fourth area wave, kind of ABC corrective move from here down to this level here, and then the fifth area wave has ended here. A corrective move, B corrective move, and then we just end up into a consolidation mode, okay? Because of all the news and the speech regarding Mr. Bernanke coming up tomorrow, the market just went into consolidation mode, couldn't decide anymore what's going on. A lot of speculators taking position already in this Euro USD and all the blah 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 happening here. So a kind of consolidation as we have seen for the Australian dollar US dollar currency pair. Same thing, okay? So try to understand what you are doing and also paying attention to the price there. So in normal condition, it does not mean that the price will definitely display the fifth area wave. We just expecting, okay? So if this is the fourth area wave and we have a fifth area wave, okay, so we'll just watch it, okay? If you come to this zone, will be better placed, and we receive a signal to sell at a verified, okay, resistance zone. We will be happy to take it, because looking at the higher time frame on the monthly chart, again we are in the overbought zone, a declining, okay, descending triangle. Price break above it a bit, but the bearish pressure is still on. We will see what's going to happen, okay? So this is on the 5-minute chart of the Euro USD. Going back again to our main, okay, currency pair, it's working nicely for us here. The Australian dollar US dollar currency pair, waiting for it to come to the, okay, the zone here, 50% and 61.8. okay, I will pause the video again and allow the price to play its games, okay? Pausing the video.
Alright, so that's as you can see.
Alright, so that's as you can see for the Australian dollar US dollar currency pair. You can see that the price that we have here, first area wave, second area wave, third area wave, fourth area wave, eighth area wave, and A corrective move, B corrective move. We are now within the C corrective move, taking the price to the zone of 50%, where I place my horizontal line here. So 50% is on the non-trusting level, and the 61.8% around the trusting level on the 5-minute chart for the Australian dollar US dollar currency pair. We expect the price to come into this zone, and then it will which is the trader will start taking profit here. Okay, so it has been a bit of waiting time for the price to display the ABC correct move, as we were expecting the price to come into the zone of 50% and 31.8%. The Fibonacci as you can see, some traders are taking profit. If you want to be a bit greedy, your target should be the median line of these two levels, okay, of this channel here, 50% here, and 61.8, place your stop loss, place your profit target the median line. Looking at the euro USD, as I show you, we have again the first in the wave, second in the wave, third in the wave, fourth in the wave. Here we have the fifth in the wave. Again, it was very, very exciting because the reason is that the best place to sell should be normally this zone here, okay, where I'm moving the cursor now. I'm going to draw a horizontal line there. You can see that the price did not come very close to my horizontal line, which is up somewhere here. So it's not very, very interesting because you want to try to come near the previous resistance zone, which is right here. Okay, this will be a better place to look for opportunities to sell the euro USD. Okay, so first in the wave, second in the wave, third in the wave, fourth in the wave. You may disagree that this is the fifth in the wave. We will see. Okay, we will see. So I leave it like this for now as the price progressing. Okay, we will see. But clearly this is the third in the wave, the fourth in the wave. We will see whether this is the ABC for the fourth in the wave. But we will see. Okay. Because this video has been running for the time, okay, I will close this video now, okay, and I hope you enjoyed this video also, that you have learned something from this video, that you put into practice and others, okay, to create the market consistently. We are the TSTW and 24 traders. Thank you for watching, and we will speak to you.